Hello friends, welcome to the Warrior series of BFM. In Warrior series, we are covering all the numericals, objective questions, case studies related to all the subjects, not only BFM, we are covering it for various subjects. So now, today's session is very big one, very big. Why? Because I will be covering many questions and all are important ones. Objective ones, all are objective. So watch it fully, share it with your friends, like the video, subscribe to the channel, click on the bell icon, do it now. Okay, let's start. Banks are required to make the Pillar 3 disclosures as per RBI guidelines, at least on a dash basis, irrespective of whether the financial statements are audited or not audited. So Pillar 3 disclosures by the banks is to be made on what basis? Quarterly, half yearly, at the end of September each year, at the end of March each year. Pillar 3. See, there are many types of disclosures, many. Okay. Remember, Pillar 3 disclosures are always made on a quarterly basis. Okay, are always made on a quarterly basis. See, this is quarterly. You will say, sir, all are then quarterly only. No, all are not quarterly. Some like risk, like your management changes or risk management policies, okay, or risk management policies required semi-annually. But mainly this Pillar 3, related to Pillar 3, this is always required on a quarterly basis. Some of them are annually also. Sunita wants to choose a life insurance policy that pays certain percentage of plan sum assured after regular intervals. Which type of plan should she choose? My God, this is not at all related to BFM, but I've seen this question. I've seen this question in the exam. In BFM. You'll say how? It is. It can be. See, in BFM, they can ask you anything. They can ask you 2-3 questions on insurance only. Because everything is related. BFM is basically financial, bank, financial management, financial field. So now you tell me, give me the answer. Yes. Whole life, endowment, money back, and unit linked, unlinked, unit linked. Okay. So which one is correct? At regular intervals. This is called as money back. In money back, generally you get the money, some amount back in every 5 years. Money bank is actually endowment only. These two are same. Okay. But in the endowment, you get the money back at the end of the period. See, suppose my policy is for 20 years. 20 years. In endowment, what happens? I'll go on paying and in the end, I'll get the full money. This is endowment. But in money back, what will happen? In money back, it will be some money after 5 years, some after 10 years, like this. Okay? Clear? In the treatment of second loss facility, which of the following statement is true? Second loss. Second loss facility. Second loss facility means what? Means how will you consider the tier 1 and tier 2 ratio? The deduction shall be made 40% from tier 1 and 60 from tier 2. Deduction shall be 50 from tier 1, 50 from tier 2. Deduction shall be 60 from tier 1 and 40 from tier 2. Deduction shall be 70 from tier 1, 30 from tier 2. Now this is quite common, quite normal question. It is asked almost. We have numericals also on this. I have solved many numericals also. So what is the answer? Be very fast because today's session, big one so, okay? 50%. Comment section. I want it in the comment section. See, give it in the comment section. So what is the answer for this? 50%. The deduction shall be 50% from tier 1 and 50% from tier 2. Okay? Now link this. You try this now. You try this, everyone. Yes. Yes, what is the answer? What is the answer? Liquidity risk. It's related to what? Risk related to purchasing power. Power, it is power of income. Risk related to firm's capital structure. Risk related to inability to pay its dues on time. Risk related to fluctuations in profits. Now match the following. You can call it match the following. Yeah. So the answer is liquidity. Liquidity risk is related to this. Inability to pay its dues on time. If you don't have money to pay your EMI, you are having a liquidity risk. Same thing with the banks. If bank doesn't have money to pay to the depositors, it's in the liquidity risk. Somebody is asking me what is the second loss facility in the earlier question, this one. What do you mean by second loss facility? Means, what is the meaning? I gave you the bifurcation, but what is the meaning? Somebody is asking me that. What is second loss? Second loss means it comes, you can call it tier 2 actually. It comes in picture when the first capital is exhausted. Tier 1 capital is exhausted. Afterwards, still I have some money to give. Then which money should I use? Then I'll be using this tier 2, second loss. Again, that is meaning. Business risk. Risk related to purchasing power, power of income. Risk related to firm's capital structure. Risk related to inability to pay its dues. So this is already gone. Risk related to fluctuations in profit. Now business risk you are talking of. Purchasing power, capital structure, or risk related to fluctuations in profits. Either of these three, 1, 2 and 3. Yes. See, business risk is mainly related to your purchasing power because capital structure is also different. Let me see the third one. Financial risk. Yeah, correct. This is related to your purchasing power. 1. Risk related to purchasing power of income. Now, what do you mean by this? How can you explain this? See, business risk is a long-term risk. It is also called a strategic risk. Strategic. Okay. Business risk is also called a strategic risk. Now, one thing you note in business risk, purchasing power means what? Time value of money plays an important role. The 100 rupees today will not be the same after 5 years or after 10 years. So that's the business risk. If you are not able to judge the future, the technology coming in, the change in the environment, the financial, the time value of money, the inflation rate, if you are not able to judge these, you are gone. That is basically business risk or strategic risk. So that is the answer. Next. Financial risk is related to what? Now see this. This is gone. This is gone. Now risk related to capital structure. Risk related to fluctuations in profit. Now these two are important. Financial risk. Okay. It is related to financial. See, it can be anything actually, second and fourth. Okay. If you have to choose between these two, then there is a problem. Otherwise, both can be the right answers. Because financial risk, if you don't have a proper capital structure, then also you are in the problem. If you don't have if your profit fluctuations are heavy, then also you are in the problem. Okay. So it is related to both actually. Got it? So the best answer over here will be both 2 and 3. 2 and 4, sorry. Okay. Which of the following statements is not true regarding the basis point value of the bond? Not true regarding the basis point value. Now what is basis point value? Firstly, understand this. In fact, it's given over here only. Let's see. I'll explain you well while dealing with this ABC. Basis point value of a bond is a measure of price volatility of a bond prices to 0.01% or 1 basis point change in its yield. In fact, that is the definition of basis point. See, there are two methods of measuring value at risk. Okay, two methods of measuring value at risk or market risk, you can call it. One method is your basis point valuation. Second method is the modified duration. Okay, modified duration is related to 1%. 1% change in this repo rate or benchmark rate. What is the change in your overall portfolio price? That is your modified duration. This method is known as 1/100th part of 1%. 1/100th. Okay. So that's why it's called 0.01% or 1 basis point. So 1 basis point equals to 1% divided by 100. Simple. Okay. So this is true. But what do you want? You want not true. A large basis point value implies bigger change in the price of the bond. Suppose if my basis point value is high, it means obviously, see, both, you call it modified duration or you call it basis point valuation. If the value is higher, it means the change in price of the bond will be higher. Okay, it will be higher. So it means this is also true. Higher basis point value represents lower risk to the investor. Higher basis point, lower risk. This is false. Why? What does it mean? Higher basis point means what? If my repo rate changes by 0.01% and my basis point value is, let's say, 100. So my portfolio size will change by 100 basis points or 1%. So it is 100 times. Okay, this is 100 times. This is called as delta. If somebody has studied these options, that is called as delta. There are 5 Greeks for any change. Okay, one of them is delta. So this means that with 1%, 0.01% change in the benchmark rate, what is the change in the price of your portfolio or bond? Okay, so this is false and this is what you want. So this is the answer. C. Okay. Which of the following statements are correct regarding value at risk? Correct. Now you want the correct one. Okay. In exam, always remember, if you just focus on what is asked, whether they are asking the correct one or wrong one, I mean they want a true one or false one, you will save around 5 to 6 marks just by reading the question properly. Okay. It predicts the worst case loss at a specific confidence level over a certain period of time under normal trading conditions. So you want the correct one. It considers the volatility of prices and correlation of prices with respect to all other assets and liabilities in the portfolio. Assets and liabilities. See, assets and liabilities, this is the wrong answer actually, because correlation of prices with assets and liabilities. Prices of the bond are not compared with the asset and liabilities in VAR. They are compared with the change in the benchmark rate. Okay. So this is wrong. But is this right? First one is right. Let's check that. See, always remember, value at risk concept is used in normal trading conditions. Now, what do you mean by normal trading conditions? Understand this. Normal trading conditions means, it means, suppose if COVID happens. COVID happened in 2020. That was not a normal trading condition. When there is a news, then normal trading condition does not exist. Tomorrow, if there is some big news, some war, some country goes for a war, so that will not be a normal trading condition. When everything is okay, nothing is going on major, at that time all these rules and regulations, means these this is basically a technical tool, they are applied. Okay. So the correct part about this is only one. Okay. Under normal trading conditions, always remember, whenever you hear the word VAR, Always remember we are talking of normal trading conditions. Okay? Which is not the part of tier 1 capital? Equity shares, redeemable preference shares, share premium, general reserve, capital reserves. Not a part of tier 1. Not. What are the parts of tier 1? Yesterday I have explained it. Means in earlier lectures I have explained this. See, tier 1 capital includes two parts. CET1 and AT1, additional tier 1. Okay? CET1 has four parts. Okay, shares, share capital. Now this share capital includes your paid up share. Okay? It does not include your preference shares. Okay? Then reserves and surplus, R&S. Then it includes net profit. Then it includes revaluation reserves. Revaluation. Now this is taken at 55% discount. Discount. Okay? Discount. Okay? So this is 55. Kindly note. Somebody might think it as 85. So 55. Okay? So 81 includes two parts, PNCP and IPDI, Innovative Perpetual Debt Instruments. PNCP is Perpetual Non-Cumulative Preference Shares. So these are the parts of your tier 1. Okay? Now this, which is not there, redeemable preference shares. This is not the part of tier 1. This is a part of tier 2. Tier 1 is a free capital, going concern. Follow my earlier lectures. Okay? Next. The following is not an example of operational risk loss. Not an example of operational risk loss. Driver salary, penalties paid, loss due to fraud, compensation for loss of instruments in transit, payment due to award of ombudsman. Not an operational risk. See this, answer is easy. Driver salary. But what about others? See this, operational risk includes your legal risk, your documentation risk, your situational risk, means floods, dacoity, terrorist attack, your system risk. System means your system failure. That is a part of your operational risk. Okay? So what all is included in operational risk? That is what I have told you. In fact, documentation risk, yeah, I have already told you. So driver salary is a regular job, isn't it? It's not a risk. Which is not the part of operational risk. Again, not the part. Inadequate internal process, inefficient people, failed system, defaulting borrower, and natural calamity. Just now I told you what is the operational risk. Right? So, what is the answer? Defaulting borrower. Why? Why defaulting borrower? Why defaulting borrower is not an operational risk? Because it is, this is the credit risk. Credit risk. Kindly note. Okay? Kindly note. Chalo, I'll explain you credit risk also. Credit risk is of two types. Counterparty risk. Counterparty. And second is country risk. Country. Okay? So these are the two types of risk in credit risk. Counterparty means your country is good, but the counterparty is bad. Means you sell something to someone in, let's say, Europe. So European countries are good, but that person is bad. He is not paying you. He or she not paying you. Country risk is opposite. Your party is good, but the country is bad. You sell someone in Pakistan, and Pakistan does not allow any foreign currency to go out. Afghanistan, same. So these are the two types of risk in credit risk. So which is not a part of operational risk is this. Remaining all are there. Inadequate internal process, inefficient people, failed system, natural calamity. Just now we discussed. What is meant by banking book? Now remember, there are two books in any bank. One is banking book, second is trading book. Okay. Banking book will involve everything related to the business of the bank. Means any money which is generated from the business of the bank. Means what? It consists of off-balance sheet items. It consists of on-balance sheet items. It consists of both off-balance sheet and on-balance sheet. It consists of items appearing in the bank's ledger and other books. It consists of all investment portfolio of the bank. So what is the answer? See, all investment is not the answer. Why? Because see, firstly you remove this. Because all investment includes your banking book and trading book, both. So this includes banking and trading. Okay. What about the remaining ones? Off balance sheet, on balance sheet, both off and on balance sheet, it consists of items appearing in the bank's ledgers and other books. Now, if you compare this, okay, the real answer for this will be D. Because which appears in the ledger. Now, banking book means all the money which comes in the ledger of the banks. Because after all, it's from the business of the banks. But actually, this can also be the answer, A, B, C. Because after all, this also comes in the ledger. Okay. But why C is not the answer? Because D includes C. Okay, D includes C. That's why. Got it? So now, before going, everyone, kindly join the Adda 24/7 crash course immediately. See, the crash course is just starting. Okay? I'll show you. See this, download the app first. The app is available on both Google as well as Apple. Both it's available. Download it right now. By downloading it only, just by downloading, you will be getting 1% discount immediately on all the purchases, just by downloading. Okay? So look at the crash course thing. Go to JAIIB and CAIIB. Even we have the CAIIB December case study MCQ batches. So this is also going on. You can join this also. See this. 8th November, CAIIB case study PYQs, MCQs batches. Now it includes all your previous year questions, MCQs. Okay, it includes all these. Now look at the ebooks, mock test, online live classes, recorded sessions, everything you are getting. Now ebooks and mock tests are chapter wise as well as full length. Full length are also available. They same as your exams. So go for it. Use the code Y432. Kindly note Y432. Okay. 79% discount you are getting plus 1% extra through the app. So 80% discount you are getting. So don't miss this. Join